Welcome to Momentum Monday. Today is Sunday, July 14th. What's going on, Howard?
What is going on? It is, I am in Hartford, Connecticut. Where are you?
I'm in San Diego, California.
So I played a lot of golf this weekend. I'm off to the British Open next weekend, and it's a good time to be traveling. The market goes up every day. You seem to
Basically,
be enjoying it.
I mean, yeah, the
Did you
market's
watch some of that? Did you watch some of that tennis? Are you sponsored by Nike now?
I wish. I'm trying to get them to sponsor me, but
For what? Over 40 Bulgarian volleyball team? What did you watch some of that tennis? It was fabulous.
no, I didn't. But I heard it was amazing. Yes,
It's unbelievable. You look a little bit like Djokovic yourself.
thank you. But I don't play like him. But
Is he it's all the same now. He's from your part of the world.
yeah.
Yeah.
It's Serbian and Bulgarian, so yeah, it's close.
He's 32. He's won 16 majors. What have you done? 17 now.
He's won what? Oh, 17. Well, good for him.
All right, let's get to the market. It looks like you're jonesing to cover the market.
All right, let me share a screen.
Get us caught up here.
All right, this is the chart of the S&P 500. Closed at all-time high last week. The same for the Nasdaq 100. All-time closing highs. The small caps are kind of still lagging, but this is a very constructive price action. Look at that tight price range above the rising 50-day moving average. And considering that the new earnings season unofficially starts tomorrow with JP Morgan and a bunch of banks reporting this week, we might actually see it'll be interesting to see if financials will take the leadership role and therefore help the small caps to catch up. Because right now I think that financials might be in a really sweet spot where on one side we have rising interest rate expectations, which is pretty clear. I mean, look at what's happening in gold, which is looking super constructive. Gold miners also super constructive, setting up near 52-week highs. And then in the same time, long-term treasuries are starting to come down. So long-term inflation expectations are finally starting to rise. And in the same time, we have the Fed willing to cut interest rates. So, I mean, considering that the bank borrow on the short side of the curve and they lend on the long side of the curve, this is a really good spot for many financials, and we might see actually many of the banks. I mean, they've already started to break out, which they usually do just before earnings. And don't forget that just a couple weeks ago, most of them passed the so-called stress test. So.
Yep.
And they're loaded with cash, which they want to distribute to shareholders. So I think we might see some type of rotation into financials and into the old economy sectors. And
yeah, I have to agree. I'm just looking at JP Morgan. I mean, the XLF is what looked at, but take a look at Goldman. We talked about it for the last few weeks, kind of getting back above its 200-day for the first time in a year and a half. And if we go out further, I don't think there's any resistance until we basically get to like 250, the all-time highs. So you really could see a run. I mean, I'm not going to play the financials, so I'm in the same position I've been for weeks. I'm long, I own enough stocks, and I'm looking for fresh breakouts, but the financials don't do it for me. I mean, I think there's, as we've been talking about it, I think there's the trade to the long side if the markets continue to rally, and if interest rate expectations rise, there's a trade there, and they have obviously people want to play the leverage to the financials, but the Nasdaq's still the place to be. And barring as we've talked about for the last month or so, barring headlines risks, there's a lot of people got to play catch up to the indexes this summer. I mean, the S&P this year is up 22%, 21%, and quiet summer months. There's a lot of people needing to play catch up. And I think what's interesting too this week, sorry, I've got I don't know how to turn off these text messages, but can you hear me, Ivan?
Yes, I can hear you. I mean, you can just click on that app for the text and just quit it for a second.
Yeah, I'm going to try and... Sorry, everybody. Why is this not working? Message, quit message. Let me see if that works. Sorry, everybody. Okay, now I'm trying to find our video again.
You're still here, no worries. We're looking at the S&P 500.
Yeah. I think what's interesting about this is it's really just tech with financials catching up. Healthcare also, Ivan, XLV.
Well, not that much healthcare, especially.
Well, XLV broke down. Illumina broke down last month. It's a stock that I like, but it's why I don't really like to own biotechs. You could see that was breaking out, looked fantastic, and then down, 70 points on massive volume. It's a great company that just missed their number. And you can see the biotechs tried to, they looked really good, but now they're back, into some bases.
Such sector rotation are very typical for bull markets. Don't forget that bull markets are markets of stocks. We might have one sector go up 2-3% in a week while another goes down.
No, but they were leading. So to see a couple of the leaders kind of crash out is interesting. I think.
Well, let's see if they manage to put new bases. But as of right now,
DCYQ was one. CSII is one that I own.
Money is definitely going into other sectors right now.
Yeah. Which, yeah. I mean, these companies don't make money, and if the market's good, people will look for sectors that have money. I'm looking for a chart from. I'm looking for a chart that I found. Oh, on interest rates. So this was interesting from Ryan Dietrich. I don't know how to share my screen, but can the Fed? So I think what was interesting this week is, there's 100% expectation of a rate cut. And so Ryan Dietrich said, going back to 1980, they've done a rate cut 17 times with the S&P within 2% of its of new highs, and a year later the S&P was higher all 17 times. So when you have guys crunching numbers like that, the quants, and I'll include it in the notes.
What is your handle?
Ryan Dietrich. Don't worry, I'll include it in the notes to the show. But a year later, the S&P higher all 17 times when they've cut rates within the S&P within 2% of all-time highs. So, everybody's, it's happened before. President's trying to get reelected. That's how the system works. And the markets are getting juiced. And I think there's investors are nervous, right? They're still, in cash. There's still a lot of cash on the sidelines. And I think people are, trying to find, fresh ideas and fresh breakouts, but the growth really is in tech and, and so the money's rotating much slower. So yeah, the financials are the ones that could get the lift here. Let's go to the, our list, Ivan, and see if anything new shows up that's interesting.
There are just a couple new stocks, and they're kind of one old economy, like Chipotle is back since it's kind of setting up near its all-time highs again. It looks beautiful on a daily time frame, and on a weekly even. It's constructive, which is normal with the market at New
But they had
all-time
to triple to get back to all-time highs. So it's come a long way. People need to remember. But if we go back to the monthly, Ivan, it's been in a, I don't know, 4-year base. It's a 4-year correction. With,
really long base, yeah.
And what didn't exist 4 years ago are and I say this all the time, is if you pencil in Postmates, Grubhub, Uber Eats, Chipotle is now now that they have all those stores. I don't know how many stores does it say in Chipotle's.
Let me go back real quick.
Yeah.
Doesn't say, just say $20 billion company.
Yes, yeah, so $20 billion company. I'm trying to think.
2,452.
Yeah. So those are all hubs for distributing burritos, and in the Chipotle's brand, if you got Grubhub, Uber Eats, DoorDash, Postmates, all competing and just giving away. You open up if you're a kid, you just get hundreds of dollars worth of free food and services, and sure enough, they're spending it and Chipotle is not giving that away. So the restaurants have been really big beneficiaries. And if you look at one thing, I've spent a lot of time watching some friends interact with Starbucks, which is another great, was in my 8 to 80 list, and stupidly in the 60s I got out of that stock. But it's been in just a straight jihad from last June, up almost 80%. And I think they, like McDonald's, have really just been a huge beneficiaries of bigger menu, cleaning up their stores, high margin products, coffee, breakfast, desserts, and really appealing to the mobile generation. On the Starbucks app, so many people just order their coffees on the go and then pick them up, especially in New York. They order them from the app. What's that?
Yeah, I think the same thing here. People just upload some money on their Starbucks app, and they just ordering from their phone and just go pick it up. It's very common.
Yeah, what's amazing is they kind of are like tech companies. They've been using tech, and now they're benefiting from tech. So the restaurants should, they're not cheap. They're trading at 25, 30 times earnings. So again, they're not cheap. But if they're going to be more technology companies in terms of delivery, and Starbucks, McDonald's, even Yum Brands, if we look at Yum Brands, which is Kentucky Fried Chicken, all these stocks are at all-time highs. I think Pepsi and Coke are as well, if we were to look. Yeah. So again, the breadth is pretty good. We could go through the markets, and we can see a lot of good. There's just strength in a lot of places, and so so let's go to the list, Ivan, and see if you see a couple names that show up. Zoom was showing up. It's one of my favorite products of this, but the stock.
Yeah, cybersecurity here is starting to move again. This is the ETF hack, just trying to go back to its all-time highs again, and therefore we're seeing Zoom, like after quick pullback to its 50-day, now it's starting.
One of the most viral, popular products in tech right now is for video sharing, and then cyber obviously leading in the cyber.
Still
breaking out
a few week base, and now it's setting up again.
Yeah, and if you see the earnings growth, it's just fantastic.
Yeah. So in general, we have so many different sectors that are near all-time highs. I mean, right now there are only 2 sectors that are not working: biotech and China. Everything else is just
energy. I think energy's obviously been weak too. And anything in the Chinese sector look interesting, Ivan?
Well, some of the stocks are kind of setting up. Let's say this one.
Just kind of like the Shopify, EZUN is like the Shopify of China?
I said they all move together right now. I don't think they're moved based on their individual merits, but this one looks better than most of the rest since it's above its 50-day and above its 200-day, and it's rising and it kind of consolidating here.
Yeah.
But as I said, they move together. So,
Yeah.
if you enter any of the Chinese stocks, I would do it with a much smaller position, and because when you buy it, you're basically buying China, not really buying an individual name right now.
Yeah.
There's still
and then emerging markets have been on fire.
Yeah, especially Brazil starting. Brazil, after a big drawdown, they're back near 52-week highs, and we talked about it last week, if you remember. We talked that so many Brazilian stocks are breaking out, and not just the tech stocks, just companies from the alt economy sectors like airlines and banks.
Yeah, sorry, I can't shut this off. But what I was going to say to you was the airlines. If we look at the airlines, Ivan, they're breaking out, and the U.S. economy does well when these airlines are breaking out. So you've got American Airlines, actually the weakest, but Delta and United, it looks like they're breaking out. No, actually not. What's the XAL? That's the airline index.
XAL, it doesn't show up here, so no. But yes, some of the other
XAL.
No. Airway. Yeah.
The XAL, Ivan.
Maybe the aerospace and defense. Well, nothing's showing up, Howard. XAL, right?
Yeah. Okay. Well, I'm wrong, but I'm just looking for the index. So give me a second here. Damn it.
Doesn't matter. We already saw the few major ones, like United setting up for a breakout, and Delta already broke out. And I also think that the Alaskan Airlines are looking good.
Yeah. Okay, so this will be interesting in terms of, will the markets just continue?
Yeah, especially considering that the earnings season begins tomorrow. So
yeah, earnings season begins tomorrow. Tech, I'd say, continues to be the leader, and then keep an eye on financials and emerging markets. And have a great week, Ivan.
You too, Howard.